All right. Welcome, everybody, to the first ever episode of Junior Resource Investor. I am your host. This podcast is dedicated to deepening your understanding of the junior resource sector and also highlighting some important and exciting plays within it. I am excited to introduce our first ever guest, Shawn Khunkhun of Dolly Varden Silver. Dolly Varden is a gold-silver explorer operating in BC's Golden Triangle. It trades on the TSXV under the ticker DV, and on OTCQX in the States on the ticker DOLF, DOLLF. Shawn, nice to see you. Thanks for coming on the show.
Yeah, I'm really excited to be here, and I'm really happy to be your first guest. And I know we're going to look back on this in a few years after you're a rock star, literally in this sector. And no, just honored because, like I said, I'm doing this because I believe that you've got the passion and I'm really impressed with the work that you've done, and I'm excited to be here.
Thank you, Shawn. Yeah, build a legacy brick by brick, right? Yeah, thank you. I guess, start off big picture, just macro level discussion, right? Anything you want to talk about? I guess the question I'd have for you is, do you think the bottom is in? It's been a rough past few months or even years for the junior sector. I've called bottom 2 or 3 times and been wrong every time. Do you think we're there?
That's a really good question. There's a 50-50 chance that it's there. But in all seriousness, I think what we have to look at is, I'm pretty young. At least I think I'm pretty young. And I've seen worse markets for junior mining stocks. I think back to 2008, and we were in an environment where there were companies that were trading below the cash that they had in the treasury. So their market caps were lower than their cash balances. And so we're not there. We might be at a place where companies are trading at 50% of their cash balances. So, we could go 50% lower here, for juniors. But I think what we have to look at is, and the reason I say there's a 50-50 chance of it going either way here is if there's a change in course by the Fed, like let's say by Jackson Hole, they sort of pump the brakes in terms of the trajectory of rate rises. They go from 75 basis point rises to we're not raising rates anymore, or maybe even like a reverse in course, or going from quantitative tightening to back to easing. Everything's going to go again, right? Like everything. But I think the reason that I'm a little bit cautious is because you look at, I was just hearing, Netflix's valuation. Like these are still enormous valuations. You still have Dow 30,000, Bitcoin 23,000. So we still have these, I think overinflated prices and valuations out there. And so the nice thing for juniors is the reason I've got like 40% of my net worth in junior mining equities is because I think that on a comparative basis, on a relative basis, our downside is limited. Like the Dow going from 30,000 to 8,000 is a far greater decline than looking at a company like Newmont going down 25%, right? And actually, in the case of Newmont, it's been one of the best performing equities. And I think you have a company there. Like if any investor's looking to hide out, you got 100 million ounces in the ground. You've got decades of production. You've got a company that pays, I think the 3 or 4% dividend. So, there are ways to sort of be in cash, either by owning some physical gold or silver, or owning a company like Newmont. Yeah,
and I think that, part of it for the junior sector or for, resources in general is that the valuations are always just a bit more conservative. This isn't fintech. This isn't technology where you get those ridiculous valuations like you talk about. So I think that it is a bit more of a defensive play in that sense. I agree. You talk about rising interest rates or the cessation of rising interest rates and that switch from qualitative tightening to easing. Is there anything else that maybe kind of cues or events that you would circle and kind of like say, this is it, this is a turnaround point?
A couple of things, and there's one thing that's really hard to measure, and that's like the loss of confidence, because right up until this moment, it's been all about the Fed, right? But there will come a time in the future where investors in the market loses confidence in the Fed, and then what was all about the Fed is the Fed's irrelevant. And that's really hard to put your finger on the calendar when that's going to happen, but it will inevitably. But up until that point, it's really just about Fed policy, and then also the other thing that gives me a lot of confidence that this is a really good time to be looking at hard assets, particularly junior mining stocks, is how strong the dollar's been. And I think that I'm calling a top in the dollar here short term. I think that, and that's going to be really good for things like gold and silver and other commodities priced and denominated in U.S. dollars. And but lastly, look, when we're talking about junior mining stocks, we're not talking about gold. We're not talking about a royalty company like Franco-Nevada. When we're talking about juniors, you invest in juniors so that when generalists come in and the money comes in, it's such a small space that everything goes sky high. And we're at a point right now where companies are trading at 0.3 times NPV. And we'll go to a place where companies will be valued by how many hectares of ground they have. Okay? And it could be, just prospective ground, right? So we're going to go from a place where nobody cares about earnings, nobody cares about reserves, resources, nobody cares about the fact that in order to keep living a modern life and the life that we've come accustomed to, we need this stuff. And nobody seems to be interested in that in this moment, but we'll come to a point where that'll be important, but it's such a small space and it's such an underinvested space that if you've got prospective ground, that'll be highly valued, and junior mining stocks will be valued like some of these high-flying tech stocks were in the last couple of years. And we've seen it. I lived it in 2010. One example that I'll give you is a company up in the Yukon that was operating up there called Ryan Gold. And I know the story intimately because I ended up acquiring the Ryan Gold portfolio after the market fell apart. And here's one story. So here's a story where this company just had a lot of ground. They had a lot of ground. And they had a lot of ground that a very famous prospector put together. So I don't want to undermine that. But it was just prospective ground. And the company traded on June 30th, 2011 at a valuation of $468 million on prospective ground. $500 million valuation on prospective ground. Now, I bought that portfolio in a public company and we paid $150,000 in cash and we issued a few shares. So, I think the opportunities for mining speculators is this is one of those moments where I haven't seen in my 18-year career or studying 100 years of financial history when it comes to, going back to the Homestake minings of the 1900s. I haven't seen a time where I've been this confident, where, the gold price is high, the equity valuations are low, and this is a tremendous time. And the good news is when we look beyond gold, you look at something like silver, for example. Let's say the average pure silver mine all-in sustaining cost is $17 or $18 an ounce. And with the price at $18, Matthew, what incentive is there for a miner to produce? I'm not talking about develop. I'm not talking about explore. I'm talking about produce. So to me, we're in like we're in the first inning when it comes to silver speculation. So if you're okay waiting, and if you trust that you're getting involved with a company that isn't going to dilute you down to nothing, and that's what you have to be concerned about, right? Getting involved too early in a sector, you can get diluted down, and that's where your opportunity to profit gets eroded. But if you work with companies and management teams that are sensitive to that, and that sort of mitigates that risk. It's still a risk, and there is an opportunity cost. But I think this is just a tremendous time. And I would, I'm telling, like, there's been 2 times in my career where I've gone to family and I've said, yeah, got it. This is the time. And one was 2009, right? In Q1 of 2009, I went to family, to friends, and I said, you got it. This is it. This is, like, they just came out with this thing called QE, and we're going to go to the moon here. And don't get in because you want to get wealthy. Get in because you want to maintain your middle class lifestyle, right? Because everything's going to get very expensive, and this is the only way to protect yourself. And the second time I said that to people was in 2020, in the spring of 2020, because it was like, and the next crisis we go through, and we will go through another crisis, the amount of printing they're going to have to do during that crisis, if the wheels don't fall off the bus, it's going to be unprecedented. So this is the time you want to position yourself. And I think, conservatively, commodities, gold, silver, sensible place to be.
No, you and I are in absolute agreement there, right? I mean, even sidestepping the black swan macro sector risk. I mean, just you see chronic underinvestment in exploration and development in this sector, and I mean that just can't go on forever, right? So I mean, people need to divorce themselves from their emotions. And you don't make money when you invest emotionally, right? If you know how to pick the right company, like as you mentioned, as you reference, and are patient, I think this is a massive opportunity for wealth generation, or as you say, preservation of middle class expectations, right? No,
So take your investable capital, what you're looking to speculate, and go put 20% of it to work today, tomorrow, okay? And then wait till the next Fed meeting, and then go put another 20% to work. And over the course between now and the end of the year, get 100% invested. Because I think if you take that approach, your dollar cost averaging in, and the valuations in this sector are, I don't think they've ever, been better from a commodity price to equity valuation standpoint. And this is a great time. But having said that, we have seen in recent history, all you have to do is go back to 2008, where the valuations were even better. So we could see 2008 valuations. We could actually see valuations that are even lower. It's possible. Like, with all the debt in the system, and if confidence is lost, because they saved the system, right, in that moment, right? What if they can't save it this time? And that's where you come into major foreclosures, major bankruptcies, major delistings, and a real cleansing. Now, I say there's a 50% probability of that. The other 50% is we inflate our way out of this. So I think having that 20% exposure today, and then waiting a few weeks, and just dollar cost averaging in is the sensible. And again, I'm talking about speculative capital, right? Like, I'm not talking about going out and, I'm not, who was it, Michael Saylor, who was telling people to go out and mortgage themselves to go long Bitcoin at $50,000, $60,000. That's not what we're talking about here. We're saying make some Vegas-sized bets in junior mining stocks.
Well, I guess I'm curious now, just as a follow-up, traditionally, historically, gold is seen as a hedge to inflation. That's not the case what we've seen here, right? That gold has not taken off as maybe people in the sector were hoping. What is your core investment thesis for gold? As you are a gold and silver company. I mean, what are we looking for here then?
Well, see, I kind of view it a little differently. So I think gold got ahead of inflation. So I think if you look at gold, the gold price in 2016, January 2016, it was $1,000, right? You look at the gold price in May of 2019, it was 1,300, right? So I think gold got ahead of the inflation, and it has done a tremendous job protecting investors. So I think if you look at it from the standpoint of when the inflation numbers, because, we're looking in a rearview mirror when those inflation numbers come in. It was, last month's or last quarter's. So I really think gold gets ahead of all that and starts pricing in what's coming. Like they say, equities are 6 months ahead of Main Street, right? So I think gold is, 6 months, sometimes even a year ahead of those, inflation numbers that are in the rear view mirror. So my perspective is gold's done a phenomenal job, and it's down right now. I think on a 12-month basis, maybe it's down 4%, right? And I think again, when you look at other asset classes, depending on what index you look at, but let's just say indexes are down about 25% in the last 12 months. So, I think gold's done a tremendous job doing what it's supposed to do, right? Wealth preservation. It has protected us from inflation. And that's my perspective.
So can't help but ask, this is what I find so curious is because gold has treaded water now, like you say, for the past 6 or 12 months. Yeah, it's been up past north of 2,000, back down into 1700s, 1800s. But yeah, the juniors have just fallen off a cliff, right? So even while gold itself has treaded water and stayed flat, which is a success in this market, right? You can say S&P down 25%. Again, you mean any theory crafting as to why? Like why are juniors getting hurt so bad?
Yeah, good question. So if you look at forget juniors, let's go to best in breed. Let's go to Barrick, right? Let's go to Agnico. These companies, if you go back 2 years to when gold was coming into that $2,070 all-time high, those companies are down 40%. 40%. Gold's down 4%. Those companies are down 40%. So it's not even just the juniors, but I just think that it goes back to what I said when we started, which was you get into this sector to speculate, right? And so mining's a tough business. It's a business where a mining company every day is depleting their inventory. They're trying to replenish this inventory. And I think it's a tough business. And the only time it's really rewarding for investors is when you've got rising commodity prices. And so, I just think that it's a case where, as an investor, get some physical bullion, right? You're looking at companies like Franco, like Newmont. Those are companies. Companies that you can own all the time. But every other company in the space, it's a tough business. Like if we go back and look at where the share price of Barrick was in 2007, or we look at like a Newmont predecessor, Goldcorp, the valuation of Goldcorp in 2007, Goldcorp was a $40 billion company in 2007. What was the price of gold in 2007? It was well under $1,000 an ounce. Gold goes to 1,900. Where does Goldcorp get acquired by Newmont? At a $10 billion valuation. It goes to tell you why they're called precious metals. They're rare. They're difficult to mine, and I think that's for speculators. Gold is your insurance policy. Gold is your wealth preservation tool. Physical is the thing to be in. And then when you come into a point in the cycle where you think it's time to speculate, again, you have to, this is where, following experts, a guy that I have a lot of respect for, Bob Thompson, who is a portfolio manager at Raymond James. Bob talks about the mining clock, right? He talks about the cyclicality of the business. He talks about, being round tripped, right? And I think that it's important to understand where we are in the cycle, or where we are in Bob's mining clock, and what type of companies you want to own. So, for example, if we're in a bear market, a royalty company is a great way to get exposure to precious metals or metals, depending on what type of a royalty company it is, and survive through that bear market. The company's got low admin, low G&A, but it still has exposure to metals. And those are companies that I think are the ones to own during the bear market. And then when we're in the most bullish of frenzies, it's the explore codes, the discovery stories, right? Those are the ones you want to be in. And I think based on my analysis, I think we're probably halfway through this cycle. I think if, depending on how you look at it and how you, whether you think, 2000 was the beginning of the cycle and we're still in that one, it's a great 22-year cycle. Or if you say, no, the cycle started again in 2016 and we're 6 years in. Depending on how you define it, either way, I think we're at a point where this is the time to own projects that have resources in the ground. Okay. But they're not looking to build them. They're looking to grow them. And so, I think having that discovery potential, that exploration potential, and having just a prudent, business plan when it comes to not overspending, and being sensitive to dilution, and having an asset that you can grow that will ultimately be a pipeline project for a major, right? Because then you're not going through the construction risk, the financing risk. You're keeping yourself lean. You've got this resource or treasure in the ground that's giving you optionality to rising prices, and ultimately a miner's going to need to buy you. So what's the perfect company to own in this time in this market? It's a company with a defined resource, with opportunities to grow, that's not going to build. So you're not going to go into that part of the Lassonde curve where you're getting into that really boring, and you've got the construction risk and the financing risk, and you've got the dilution and the execution risk and all that permitting risk. And so, so what I would recommend for investors to do here is, start off with some physical, get some exposure to best in breed, the Francos, the Newmonts, and then if you're wanting to speculate, go look for companies with large, high-grade resources in safe jurisdictions, because those projects will get bought out, and they will get bought out in a premium. And if you're lucky, they'll get bought out at a time in the cycle where you get the maximum value for those ounces.
Well, this might be a good transition for us to leave macro behind us and start talking about your own project, because speaking, objectively here, and this is why I am a retail investor, and this is why I asked you to come on, is that I believe in your story. A lot of what you talked about, right? Pre-existing resource, prospective land, interest in mid-tiers or majors. I mean, I think that, that describes Dolly Varden. So do you mind could you give us, just to start off, maybe a little, a 30-second elevator pitch on Dolly Varden?
I'll give you like a 5-second elevator pitch. Size meets grade in a safe jurisdiction.
Well done. Put that on the license plate, eh? Yeah, there you go. Okay, good. Yeah, so like I say, I come at this as someone who is an investor in Dolly Varden, and I'm excited to have this opportunity because I am a believer in this story. Do you mind just walking us through your personal history, what previous jobs, and maybe how you ended up at Dolly?
How far do you want me to go back?
First shift at McDonald's. Yeah.
Yeah, totally. So, I got exposure to this sector, to this business when I was 22, and sort of worked my way through what's known as investor relations, shareholder communications, and I built a network of investors over the last 18 years. And, what I love to do, Matthew, is I love to try to find projects that I think are undervalued and where my team can add value. So I work with a gifted team of scientists, and I say to them, listen, I can transfer wealth. I'm a marketer. I can transfer wealth, but the real wealth creation is done by the scientists. So I work with a tremendous team head up by Rob McLeod. Rob is a exploration geologist, and he's actually from the Stewart, BC community, which is where our project is situated. And so, not only is Rob a gifted geologist, but he's also got strong ties to this community. So what's driving him is how do we make the lives of people in Stewart, around Terrace, with the Nisga'a, in the Nass Valley, with our Indigenous partners, how do we make our lives better, right? And how do we create value for our shareholders? And so how do we create an environment where it's a win-win? And then we've got just a tremendous team that supports Rob, our VPX, Rob Van Egmont. I can go through a long list of talented people because it's really the people that, drive these companies, right? It's our project manager, Amanda Bennett. It's Andrew Hamilton. It's these people that are the reason I have a lot of confidence that we are going to have success, because often in exploration, and this is what we found when I first took over Dolly Varden in 2020, the 4 deposits that I inherited on their own with metal prices where they are, it's too small, right? And so, yeah, we could grow it through exploration, but that was going to take a lot of time. And so what we did is when the market pulled back in 2021, and we had lots of cash that we had raised when the market ran up in 2020 and we didn't spend it, we made an acquisition. And that acquisition has taken us to a point where I feel like we've got now enough to start advancing this project. And again, exploration is the key. Exploration is the focus. That's the team that we have around this company. But, we now have 140 million ounces of silver equivalent, 50% silver, 50% gold. And what I love about that mix is, Matthew, if we lose confidence in the system, like if confidence is lost in the system and the wheels come off the system, in that moment, in the short term, silver could get hurt. And we've already seen it get hurt here with it going from $30 down to $18, right? And why has Dolly Varden not gotten clobbered like every other silver stock? It's because 50% of our project is gold. And I think having that mix, and it's not, this is a silver project with a bunch of lead or zinc, no, this is a silver project where the other 50% is made up of gold. We don't talk about any of the other byproducts. We've got copper in the system. We don't account for it, right? We just talk about the silver and the gold. Anyways, my point here is I think we've got a project that it's not the largest project in the world. You're going to find projects out there that are tier 1 assets that have 10 million ounces of gold in the ground. This is not a tier 1 asset by that definition, but what this is a project that it's got enough size, right? We've got 63 million ounces of silver already identified, plus 1 million ounces of gold. And because of its silver nature, because of the grade, like on a silver equivalent basis, we're almost pushing 400 grams per ton, which puts it in the top percentile for silver companies and for silver high grades. And so what our differentiator is the fact that we've got silver, we've got gold, we've got these grades, and it's located in Canada. And again, so it's a special company. And if companies that are silver focused producers want to maintain their silver production, Dolly Varden is ultimately going to get acquired in the future by one of these companies. And my job and my goal and my mission for shareholders is to try to identify as many ounces before that happens and to try to keep the company independent while we've got these bargain prices for silver. Like the price sensitivities, like if you run, price sensitivity analysis for these projects, like what is this project worth at $25 an ounce versus 19? It's tremendous. Like the NPV on these projects, you're almost adding, $125 million for every $3.50 move in the price of silver. and this isn't even a project that's got, like, you got some projects out there with 1 billion ounces of silver in them, right? So it's pretty amazing what if you believe in the narrative that silver is going to see new highs, and if we just get back to where we were in January of 2021, what some of these projects should be worth and could be worth in the future.
Mm. Yeah, there's lots here that I will just try to put a pin on because I want to come back to it. But you're absolutely right. I mean, you are the NPV after tax at your base case for part of your project, $12 silver, still a very, very healthy after tax NPV. So I absolutely agree with that there. See, a couple of things you mentioned that I wanted to kind of just agree with or touch on. I mean, you mentioned. You talked about an acquisition you made, which of course is a critical aspect of Dolly's story, and we'll come back to that, as well as your neighbor, right, is also a critical aspect to this. We'll come back to. I also think that you have a very strong institutional investor base, which again we'll come back to. But I just wanted to circle all the way back to where we started here. You have a new hire, right? Rob von Egmont. Just last week or two, you've hired him on as a VP of exploration, correct?
Yeah, so Rob has been working as a geologist since the 90s, and he's got a lot of experience. He's worked all over the world, and he's been part of a lot of discovery teams. And he's actually been working on this project since 2017. So he had the role of chief geologist prior to him being promoted to VPX. And the reason he was promoted is he's been instrumental in the success we've had, and his leadership qualities. And as the company grows to the next level here, as we go from this $20 million company that we were when I took over, and when I look ahead at the potential for $1 billion company, which we're looking to build here, Rob is going to be that scientist that takes us there. And whether it's dealing with issues up at camp, whether it's helping plot that next drill hole, whether it's helping communicate that message to technically sophisticated investors. I'm humbled. I'm humbled to be working with him and for him to be leading us technically. And so we wanted to honor him with that promotion, and it's well deserved and it's long overdue. And the great thing for Rob is if you look at our advisors, okay, you've got, we talk a lot about like Hecla, and we talk a lot about some of the shareholders. But, if we look at this team of advisors, so from Hecla, we've got their VPX Kurt Allen as an advisor. We've got Jody Gibson as an advisor. Jody was just decorated with Prospector of the Year for the Yukon. Jody was responsible for many discoveries up in the White Gold District in the Yukon. We've got Ryan Waymark, who is a superstar engineer. And then at the board level, technically, we've got Rob McLeod there, and then we've got this tremendous team that we've built from the ground up. And so I'm confident that in addition to the 7 deposits we have, and I think there's more discoveries in our future, this team is also razor focused regionally at other opportunities and even beyond the region. Because, I've said it many times, like our goal here, our namesake is Dolly Varden, but, our goal is to build the best silver company that we can, right? And that goal may take us beyond the namesake mine, and may take us beyond, and it already has with the Homestake acquisition, right? So, look, we're here to grow. We're here to be disruptive. We're here to, I've got a tremendous network. You talk about the institutional investors. You talk about people like Eric Sprott. You look at Hecla. We've raised about $45 million for a company that just 2 years ago was a $20 million company, right? We've done it in a way where we didn't blow up the share structure. And we've got 7 shareholders that control 85% of this company. And there's a lot of alignment amongst those shareholders. And it's one of the reasons that, I think the stock's done pretty good relative to peers, is because you have that alignment. So touching on Rob, grateful to be working with him, and we're we've created a really nice culture here at Dolly where there's a lot of buy-in. There's opportunities for advancement within the company. And actually, one of the things I'm most excited about this summer is one of I don't want to call him an old boss, but somebody I used to work with and report to, who's sort of quasi-retired, a guy named Bill Ferreira, who Bill's made gazillions of discoveries, millions and millions of ounces of high-grade gold, and Bill's coming up and he's going to be spending some time up at Dolly. And he said to me, he goes, Shawn, I'm going to find you another mine. And so it's amazing where, and Bill, he's all about, the fluid pathways. And it's all about structural geology. And I'm just grateful that, from Bill Ferrer, who's coming up and spending a couple months with us this summer, to this whole other team that we've built over the last 2 seasons, you've got all these people that are bought into making this company successful. And it's fun and it's exciting and it's dynamic. And I use a lot of sports analogies, but I feel like I've been a part of winning companies, mining companies. I've also been a part of winning sports teams. And I just have this feeling that we're going to look back on this and go, let's try to recreate that in the future, because I think this is the recipe for success. And it's you don't always know what your path is going to be there, but I think that we've created the right group of people and the right conditions, and I think that'll lead to some big success.
Well, yeah, not to pump your tires, but the hallmark of strong leadership is knowing your own strengths, weaknesses, and finding people who are better than you at things that's not your strength, right? And I think that's something that you have absolutely done with that exploration geological side of business, is that you have a very strong exploration team and you're an explorer, right? So, no, kudos.
And depending on where this company goes, if there's I'm here to make money for the shareholders, right? I'm here to make sure that for the stakeholders that the project gets advanced in the right way. And, I basically, I'm here to just serve. I'm here to serve the shareholders. I'm here to serve these talented scientists that are around me. And then it's not just scientists. Like, we just had Tim Clark join our board. Tim is a well-decorated banker from Boston who is running Fury Gold Mines now, and he's done a tremendous job of advancing Fury and its projects, and just done a great job. So I'm humbled to be working with somebody who's got great relationships in banking, because it doesn't just take science. It doesn't just take the engineers and the geologists. You also have to have, Ivan Bebic is an advisor to the company. Ivan has done this many times in his career. He took Caden from a small Explorco to Discovery to a sale to Agnico Eagle for $200 million at a time in the market where nobody was winning back in 2014, and the success he had at Keegan, and so a serial entrepreneurial success. So we have that aspect of the company. We've got the right accountants, the right lawyers, and you need that whole mix, that whole skills and experience matrix to have success.
Yeah, excellent. Why don't we talk about, we've mentioned it a couple times now, the level of institutional support. It's funny, Dolly is not a retail-focused or a retail-oriented company in terms of who owns its shares, right? I mean, I've got this from your latest investor slide deck, but only 8%. So that's a remarkably tight float for retail investors to try to buy in. Could you just kind of run through who else are kind of primary shareholders for you guys?
Yeah, so so we've got Eric Sprott as a large shareholder. And then from there, we go to 2 publicly traded mining companies. One is Hecla at about 10.5%. And then Fury Gold Mines is our largest shareholder at 33%. And they inherited that stake through the divestment of Homestake Ridge. And then beyond, so if you go Fury Hecla, that's 43%. You add Eric in there, and we go to about 54%. And then there's about 38% that are held by institutional investors. And these are institutions from Switzerland, Germany, to Texas, to New York, to Toronto, to Vancouver. And, one of the standout names there is a fund that a woman by the name of Maria Smirnova, one of the Sprott funds, that's a silver-focused fund, that's a large shareholder. Ralph Aldis, that runs Frank Holmes' U.S. Global. So these are well-known institutional investors. And we've even had recently funds that were typically debt funds that never did equity. We're the first equity they bought. And so we've had some, and this is typically what you start to see as the market matures. And that's why I think we are in probably the fourth, fifth, or sixth inning, right? And most of the money is made in inning 7, 8, and 9 for investors, right? So we're coming into that time where things are going to get manic, they're going to get euphoric, it's going to go parabolic, and signs of that is more generalists coming into the space. Now, it's funny when you say about the retail, because so much of our time is spent talking to retail investors, and it's what we love to do. And I think it's the difference between where we trade. It's that retail support and those retail investors that I talk to, and I shake their hand when I go to conferences, or I talk to them, on the weekends, or any time of day, where without them, right? Because they're the ones that believe in the team, believe in the asset, and give us the chance. So I really actually think it is the retail that really is the fundamental foundational support. But it doesn't get much better than when Eric Sprott is behind you in a big way, and having a company like Hecla, who Hecla's here because they are America's #1 primary silver producer. Like, I think they produce something like 40% of all U.S. silver is produced by Hecla, and all the other companies together produce the other 60%, right? So you've got a best in class partner that's been at this for 130 years, right? And Dolly fits nicely into their portfolio in terms of what they're looking for, in terms of jurisdiction, in terms of life of mine, in terms of grade, in terms, all these factors that we're identifying now. And again, I've got to put the caveat that, when we bought Homestake, it came with some economics around it, but we haven't put any economics around our deposits yet. So, this is all high level conceptual, right? It's, we do have resource estimates that are modern. They were published in 2019 that we're relying on when we talk about the 138 million ounces of silver equivalent. But to talk beyond that, it's we've got to come out with updated studies, updated resource estimates, and then put some economics around the project.
I think I saw in a news release that your updated resource 43101 slated for, is it Q2 2023? Is that still the case?
So, my goal here is we've got these modern reports. We've got these modern resource estimates. They're telling us that we have, 63 million ounces of high-grade silver in the ground. We've got 1 million ounces of gold. And so for me, my #1 goal here is to grow ounces, right? And so that we will have updated 43101s in the future, but the #1 mandate here, and I think about a company like Great Bear. Great Bear's focus was to grow Dixie, right? Was to grow the LP fault. And I think that having that being the focus rather than trying to put ounces on paper, right? Because the big companies that we're trying to sell these smaller ones to, they do their own models. They do their own estimates. They plug in your data and they come up with their own plan. And I think Great Bear was a great example of a company that was acquired. That was one of the greatest, discovery, exploration, takeover stories of probably the last 100 years. The biggest that I'm aware of, almost a $2 billion valuation. And, Matthew, the number of ounces that they had that were 43101 compliant, zero.
Yeah.
So I think that we're not Great Bear because we've already got this resource estimate, right, back in 2019, modern estimate. We've done a little bit of drilling at Dolly subsequent, and we're doing a lot more this year. But for me, it's more about, are we growing the deposits? And the big boys, they'll come up with their own numbers and their own estimates. And but yeah, ultimately, like, we're advancing, and advancing means doing baseline environmental work. It means upgrading the road. It means doing economic studies. It means new resource estimates. It means metallurgical work. It means all those things. We just may not ever get there. We may be in a position where we get onto a discovery and we get focused and our resources go there. And the nice thing about being a small exploration company, we're small enough and nimble enough to focus on that, like Great Bear did.
What do you get for credit then? So measured versus indicated versus inferred versus nothing on the resource, right? Just what's there, but no formal analysis. What kind of credit do you get for, say, inferred or?
That's a really good question, because not all ounces are created equal, right? Like, I remember a few years back when the markets were even tougher than they are today, when you had a company like Silvercrest, which had a really high grade project, and Silvercrest, and it was silver, was trading at some of the same valuation as some of the gold companies, and gold was trading at like 70 times the value of silver. So it's really tough to come out with hey, what's a reserve ounce worth? What's a M&I ounce worth? What's an inferred ounce worth? Because what's the grade? Where's it located? What's the strip ratio? What's the metallurgy like? Like, that's, how much, what would the throughput be? Like, I think there's so many factors. But I think that a lot of projects, a lot of development projects, or, maybe if we try to come up with some type of a consensus number, maybe the average is trading at 0.5 times net asset value. In terms of, what's an ounce worth, again, depending on how many you have, and are they economic? It really ranges. I've seen, if we're talking silver, when I look at a lot of projects, I'd say the range is from 30 cents an ounce in the ground to $3 an ounce in the ground. And so, if I had to come up with an average, maybe 75 cents USD per ounce in the ground is probably where a lot of companies are trading today. But again, you got to be careful, because some projects are so deep and so low grade that you'd need $50 silver for it to be economic. So what is that ounce really worth?
Mm-hmm. And I think that's where a lot of retail investors get tripped up, is that they see, a 2 million ounce deposit, but it's in the middle of nowhere. It's FIFO, fly in, fly out. There's no infrastructure, right? It's in the middle of nowhere, right? And so that the cost.
To that point, a lot of sophisticated investors get tripped up because they don't invest in a company because they go, well, that doesn't work. And either something changes, right, where, innovation changes it, or, maybe some new infrastructure, or maybe metal prices. So I think that what's equally great is whether it's kind of like poker, where sometimes the guy that's never played wins the pot, right? So it's I think there is some great equalizers, but that's where consulting with professionals, following newsletter writers that made careers out of doing this with good track records, following fund managers, guys like the Rob Cohens of the world, who have done this for decades and decades, and have track records of bull markets and bear markets, is where I think retail investors can increase their chances of success. And also following teams. You follow Ross Beatty and Lucas Lundin, John Robbins. These are serial success cases, right? Where it increases their odds of success. Because now they're going after, they've got good access to good projects, good money, good people, and it's going to increase their odds in the future.
Yeah, bet on the jockey, right? Absolutely. Just to circle back here, just because this is one of those things where just get the the simple questions done quickly here. Do you mind just giving us a brief overview of share structure, options, warrants, that kind of overhang, cash on hand?
Sure. So 230 million shares issued and outstanding. And, we have the ability to do 10% of that in stock options. If we have that right. We have a 10% rolling plan. But again, as part of our culture, we've only utilized less than 5% of that. And again, it's out of respect for our shareholders and that we're not egregiously abusing that power. And so, we're proud to say that, we're closer to 13 million options than 23, right? And in the case of warrants, the only warrants that are out in the company, we've got about 8.8 million warrants. The strike price is $1.10. They actually expire next month. And so, with the silver price being where it is, with the share price being where it is, there's a good chance those warrants expire out of the money. And so then we'll have no warrants. If they do get taken down, that's going to bring in an additional $10 million into the company. And in terms of those warrants, 20% of them are held by Eric Sprott.
And sorry, cash on hand, did I miss that?
We started the drilling season with $25 million in the treasury. And again, we're aggressively advancing that drill program. We're almost, actually, we're as of today, we're just over a third of the way through the drill plan meters. And so, let's just say conservatively, we've got about $20 million on hand right now.
And so, yeah, your drill season, if I correct my numbers if I'm wrong, but last I heard or read was 30,000 meters, 99 holes. Obviously, no one's holding you to those numbers. I know that, it's a very fluid situation. Could you just run down, we talk about expanding the resource, getting ounces proven to some degree, right? What ratio of those 30,000 meters are step out, pure exploration, or infill?
So what happens is, you start the season and you come up with a plan. And the conceptual plan was, let's put 50% of our planned holes into exploration. Let's go and try to double this resource. Let's go and try to find a big new discovery. There's parts of the project that have never been explored. We recently consolidated these two land packages. So 50% was exploration. Now, there's a lot of risk in that, right? Because you're going out, you're taking some big shots, right? And then the other 50% was, let's try to grow 4 of the 7 deposits, systematically. Let's step out 25 meters, and then another 25 meters, then another 25 meters, and so on and so forth. Let's step out down dip. If you look at the 7 deposits, there's been, on some of the deposits, 0 drill holes below 350 meters. So there was some low-hanging fruit at depth, and also along strike in some areas. So 50% was upgrade and expansion of known deposits. So we've got a lot of ounces at Homestake, Maine that are inferred. So let's tighten up those spacing and let's try to convert 50% of the ounces at Homestake into the measured and indicated category. So conceptually, it was like 50 holes on exploration, 50 holes on upgrade and expansion. Now you get into the field, and some of the targets start delivering, and others don't. So you start focusing drill meters on areas where you're having success. And so, at the end of the day, what we drill and what we set out to drill, there's going to be deviations based on success and failure. But that's the overall, vision and plan, was that let's go and try to grow this, but let's also try to de-risk and advance it.
How have you've no assays back yet, correct? Do you do XRF?
So what I can say about, in terms of how are things going, there are some companies that will come out and say, we've got visual, we've got, whether it's VG or native silver and create a lot of expectations. We've taken a different approach. And we put out a news release last week where we announced that Rob Van Egmont was being promoted to VPX. And within that news release, we said, look, we've drilled about, at that time, we were about a quarter of the way through the program. And we talked about we quietly talked about some encouraging visuals that have prompted us to focus more in certain parts of the project. But again, I've been doing this for 18 years, and I've had times where, you've been disappointed with visuals, and then you drill other times and you get surprised to the upside. So we'll let the assay lab definitively tell us what we have. And but you know what? Ultimately, what I could say is, from a production standpoint, we are ahead of schedule, which is amazing considering. I don't know what it's like for you in Saskatchewan, but out here in BC, we haven't had a summer like this. Every 1 in 5 years out here, we don't get a summer, and this is that 1 year. And so, despite some challenging weather up north and even here in the Lower Mainland, we're ahead of schedule, which is remarkable. And so things are going well. From a safety standpoint, from a budget standpoint, and as we said in that news release, there is some visual indications that we're going to get some love in drilling this year.
Awesome. So I should have probably brought this up earlier, but one of the major aspects of Dolly Varden is this acquisition of Homestake from Fury. It's not new news, but it's fairly transformative. I think it's absolutely an accretive acquisition. That now they're 33% stakeholders, but you have now their land package and you consolidated a nice little chunk of land. Is the focus? So I'm going to skip that just for the sake of time here, but. There's a 5.4 kilometer strike length between your two properties that were as of yet unexplored. Is that correct?
That's correct. And there are 3 separate tools that are telling us that it's highly prospective. So number one, through mapping. So the big deposits in this area are in the Hazelton Formation, which is a Jurassic Age rock. So if you look at Newcrest Brucejack, which was Pretium, and you look at KSM, which is Seabridge, you look at Premier, which is Ascot, you look at Eskay, which is Skeena, you look at the biggest mines in the area, they're in this 2 kilometer contact between the Triassic Age rock and the Jurassic Age rock. So it's the Hazelton Formation and the Stuhini. And so where those two come together, there's within 2 kilometers, they call it the red line. And so we're in the right rocks. And so and that's a big part of this. So if you're going to host one of these large Jurassic deposits, you need to be in these types of rocks. And so, we're in the right rocks, number one. And then we've done geophysics. So we've done airborne magnetics. And we've got these big magnetic anomalies, and they really light up right where you have the old border between Homestake and Dolly Varden. So we had never gone out and tested those geophysical targets because we just didn't know where the bulk of the deposit was going to lie. Was it going to lie on the Homestake ground, and we were trying to buy Homestake, and is that going to increase the value of Homestake, and vice versa for Fury? And so we're in the right rocks. We've got supporting geophysics, and then we took it a step further, and we did geochemistry. So we sampled the soils. And what we found is there's this 15-kilometer gold and silver in soil trend. So we've got the right rocks, the geophysics, the soil geochemistry, and then the one area where I said, okay, I have to go and buy Homestake Ridge is last year we had this very talented geologist come in. It was her first year, Amanda Bennett. She came in as project manager, and it was a really interesting exercise because I said to her, Amanda, you're not allowed to talk to anybody at Dolly Varden. And so for the first 2 months, she just talked to me. She wasn't allowed to talk to anybody else because I didn't want her to get I didn't want their biases to change her view. I wanted her to come in fresh and tell me, hey, where should we go? And she said a deposit to me where nobody else was talking about it, which was Wolf. She said, we got to go to Wolf. And I had to look at, hey, where is Wolf? I know it's part of our resource. I know we've got 10 million ounces of silver there, but okay, let's get oriented with Wolf. So she started her career up at Khunkhun at a Hudbay mine where there was a VMS, and they systematically, like these VMSs they're like a cluster of mushrooms. Where you have one, you're going to have many, right? So she's very systematic, and she designed the step out hole last year, and it was a risky hole because the way it works is you got these 7 deposits, okay? 4 in the south, 3 in the north. And then you have this like blanket that covers everything. But these 7 deposits stick out. So they're evident. And that's why they were, some of them were found like 100 years ago when you were riding up on donkeys and you had ice everywhere and glaciers and still they were found. But with the sedimentary cover, which I call this blanket cover, the rest isn't so apparent. So she wanted to drill a hole through the sediments. So another layer, and a 4th layer is we've got this radiometric survey that we did. And what we find is where we've got high potassic alteration, it's coincident with silver. But it doesn't penetrate below the sedimentary cap. So Amanda said, hey, Shawn, we got to drill below the sedimentary cap. So we designed this 94-meter step-out hole, and we hit 1,500 grams per ton. Brand new, 100 meters away from Wolf. And that told me that whole sedimentary cap, that whole package that starts at Dolly and dips through the valley and goes up to Homestake Silver, it's part of the same system. And so that's where we're going. So we went to Wolf and we started systematically on one pad. I think we got like 6,000 meters of drilling off this one pad, firing away at Wolf at depth along strike. And this is all based on the work Amanda had done. So, yeah, it's exciting because, we had a lot of success last year and we're hoping to build on that this year. And that's just one deposit, right? We've got all these other deposits, and then we've got areas. We brought up a new geologist, like we brought up Amanda last year. We brought up another geologist. We sponsored him up from Argentina, Joaquim Marias. And the first thing Joaquim had done is he showed me an image of Pascalama in the Andes, where he's from. So he shows me an image of Pascalama, and he shows me an image of the Golden Triangle. And he goes, Shawn, don't these look identical? And I go, yeah, I never looked at them that way. And so he's gone out there, and he's gone for the first couple of months, and he's just gone mapping. And he's gone into some old adits. He's going in there like Amanda did in year 1, and he's bringing new energy and new vision and new life and new targets. And we just posted a video on Twitter where he was up at Homestake the other day, and you've got this big Gossan that looks like Premier. And so these are the new, there's so much to be discovered up there, and we've got the resources and the team to do it this year.
Mm-hmm. And, well, I mean, circling back to the question about like the signatures that you're chasing, I mean, as someone who's watching this develop, when you have a consistent thesis where, your geophysical signatures that from known deposits, match and are consistent in a way that you know that you can, if you can pinpoint and explore based on those, I mean, that's huge, right? So that you have this land that, you have your known ounces, but you also have, I mean, every company in the world will tell you that they have prospective land. Sometimes they're blowing smoke. Other times it's more serious, right? And I think that Dolly has a very sincere and real opportunity for a large resource upgrade because you have a consistent exploration thesis.
But you know what? It is hard yards. Like if it was easy, there's a reason that if you look at mineral inventories, there's a reason that Barrick and Randgold merged, and Newmont and Goldcorp merged, because it's very difficult to replenish ounces. Mm-hmm. So I think that we've got a tremendous base, and we're going to build on that base. We have a lot of prospectivity, but let's just wait till all the assays are in before that we come to any definitive conclusions. But the nice thing is for anybody watching or anybody looking to invest is it's not a bunch of prospectivity with a pink geophysical target. We hope because there's a magnetic heat source there, we hope that's going to translate into something. Well, we already know that we've got, like you said, a certain amount of endowment. And so now it's what complements that endowment and how much more are we going to find? And that's what's really exciting.
Mm-hmm. Are there any complexities? I know that the Homestake's 43101 had a recovery rate of 95%. Have you been doing met testing yourself? Are there any complexities that, even if you can achieve 90% plus, that might increase CapEx, or is this a fairly straightforward setting?
So the unanswered question that we have this year is, and that we will answer with some metallurgical work, is number one, to answer your first question, we'd done some met work at Dolly. So we done met work and published it in May of 2019. So the silver recoveries are really good for silver. Getting 88%, 87% recoveries on silver is very strong. The unanswered question that we have is, what are the recoveries going to be when we blend Homestake and Dolly ore? And so that'll be a question that we answer. Apart from that, when you talk about complexities, my head just goes to what makes the Golden Triangle special is it's complex, right? So what makes it one of the richest camps in the world also makes it a challenging camp to make discoveries because it is so complicated. Because there is so many events that have come in. You do have a lot of post-mineralization folding that occurs. So where you would think a vein is going to be often isn't where it is. So what makes it so great and special and rich also makes it a challenge.
Yeah, fair enough. Do you mind I know that this is going to be, forward-looking statement and difficult to get accurate numbers on, but I guess two-part question. How many meters have been drilled thus far on this now consolidated DV package? And then part two to that is, if we could expect a resource update, in 12 months, give or take a few months, how many meters can we anticipate will be going into that new update?
I would say, there's been about 100,000 meters. If we look at all, projects and all the historic work and, including this year's program, you're in the ballpark of about 100,000 meters drilling. Again, we could be in a position to, we could have done a resource estimate without any additional drilling. So, that's a question where it's really up to our discretion. And it's all based on what we're hoping to achieve, right? So, one of the things that we're looking at right now is an updated PEA, because there was a PEA done and published in 2020, but it only represented Homestake. So we've looked at, potentially a PEA that represents all 7 deposits, and that would require a new resource estimate. So again, we're going to let the results of this season drive those decisions. So it's systematic in that, number one, let's get this drilling done. Number two, then let's look to put out a resource estimate. Number three, let's use that resource estimate to author a new economic study.
Mm-hmm. No, fair enough. I guess I will take this time. You do have Homestake's old 43101 from 2019, I believe. And I guess, I'm going to use this is total napkin math territory, right? Because DV does not have a resource estimate on it as of yet. But Homestake's the base case. And I appreciate this. I always appreciate conservative base cases. I've looked at other companies or other deposits where, they have a 500 million or 800 million NPV, but look at the base case and it's on $2,000 gold, right? And that's just, maybe we achieve $2,000 gold and we stay there, but it's certainly a much riskier number than more conservative ones, right? So Homestake's base case, which if you'll just bear with me here, roughly half the value of the project based on $1,350 gold and $12 silver. So even though silver's been getting walloped, still at $18, they're saying 12. After-tax NPV of 110, roughly $108 USD. And so, if you'll bear with me here, double that to include DV, you're up into the low 220s. or low 220s in terms of NPV. And if you'll just bear with me here, if you actually look at, $18 gold, well, at $17 gold, that's more than doubles, right? So at 1680, that NPV more than doubles. And so I think that this is, I'm not sure if I have a question for you here, but my point is that, I think there's very healthy economics here. Like you say, it's not a tier one asset. It's not a huge asset, but there's very, very healthy numbers here. And the fact that there is still room to grow is what I find compelling about Dolly, that you have a very high floor. You have ounces in the ground that we know about. And we also have a very high ceiling as well, I think, where there's still room for blue sky. And I think that, the NPV, I don't care if you have 10 million ounces, if they're not economical, it doesn't matter, right? That the numbers here work. And they will, and
work. Then also, just to further that, there's math and there's numbers, but if you don't have social license, right? And the fact that we've got, we're founding members of the BC Regional Mining Alliance. We've got a tremendous relationship with our Nishka partners. What's that worth? How does that impact what an ounce is worth? And I think that, what attracted me to Dolly was the fact that it was a past producer. So the community, there's two things that taught me. Number one, we can do modern metallurgical studies, but they're obviously recovering the silver. I've got the historic production logs that are validating it, but this was a producer not for 1 year, 2 years. It produced for a whole decade. The entire 1950s, Torbrit was Canada's third largest silver mine. Dolly Varden was not Canada's, but you looked at it as part of the Commonwealth. In terms of the British Empire, it was the richest silver mine in the British Empire, Dolly Varden. So we had, one of the mines was the richest, one of the other ones was the third largest in the country. And so past production, metallurgy is good. Past production tells me the community was on side. And when we got into the 2020 lockdown, COVID lockdown, it was the Nishka that were poking me, saying, Shawn, when are you going to go and start doing some exploration? Because a third of our exploration team is from Nishka, and we provide a lot of employment opportunities. So I think it says a lot that we're where this project is. And then outside of the Nishka, you've got the BC government that has been they've put on a clinic in terms of promoting the province and spending the money in infrastructure, putting in the roads, the deep water seaports, bringing in clean power, right? This is hydroelectric, clean, low-cost power. There's so many advantages here that go beyond what you need to start, which is the resource. But what's the point of getting the resource if you don't have those other aspects?
Mm-hmm. Yeah, I agree, right? And I think that's, ESG is here to stay, and you can be a believer in it and believe that, and I am. I think that local shareholders absolutely need to have a voice. I hope that gone are the days where, you walk in, dig up a mine, poison a river, and walk away with a suitcase full of money, right? I don't think that we'll ever return to that, right? And I think that it's that having meaningful local buy-in is so critical, because it's very easy for these projects to get hung up and get tripped up by permitting or protests, right? And so I guess, do you mind, this is one thing I find interesting. I would like you, can you expand, you're a founding member of the BCRMA. Could you maybe tell us a little bit more about what they do? And then, could you expand on your local Indigenous relationships and how much you've worked with them?
Well, so the BCRMA was an organization that was started in 2017. And it was an organization that was started to promote that BC is open for business when it comes to mining. And, essentially, if you look at, I can run you through all the examples, but you look at, you've got Imperial Metals, the Red Chris mine, you've got Brucejack, you've got Ascot's Premier Mine. The amount of projects that have been approved by the BC government demonstrates that BC is, it's the reason it's it's in the top quartile for jurisdictions in terms of the latest Fraser Institute report. So So BC Regional Mining Alliance is a partnership between Indigenous groups like in this case, the Nisga'a and the Tahltan, and the BC government and companies. And there was 4 companies involved in the organization. So you had GT Gold that was acquired by Newmont. And then the 3 founding members were Ascot, Skeena, and Dolly Varden. And essentially it's an organization where we work together. We work on challenges together. We try to do capacity building. We use it as a communication tool when there are disagreements or differences, or to work through legislation, or to try to express to government when we're looking to permit something. And there's been some breakthrough. Like you look at what Skeena just did with Tahltan, in terms of it's the first first of its kind agreement in this new era of UNDRIP. So. And then beyond the formal organization, like this is a morning where I had breakfast with Charles from Nisga'a, right? Where yesterday I was talking to Corrine, the former secretary treasurer. When you work within a community, whether it's Nisga'a, whether it's non-Indigenous locals from places like Stewart or Terrace, when you're in the north, you have to lean on each other. You have to neighbors have to help each other, right? And whether it's even other junior mining companies, and that's another reason we started the organization. So, I've always, and the one way I can sort of demonstrate the spirit we're trying to create a company here is in the deal we did with Fury, right? It was a win-win transaction. And everything we try to do at Dolly Varden is, it sounds kind of corny, but it's how do we create an environment where the shareholders win, the stakeholders win, and everybody participates, right? And it's not easy to do, and it's not going to be, we're not going to be singing Kumbaya around the fire all the time. But at the end of the day, there's enough here where everybody should benefit. And that's just the right way to do things. And whether you want to put a label on it and call it ESG, it's just a sustainable way to advance things, right? It's just the right thing to do. And we've been doing the right thing, for a long time before we put a label on it. And to that effect, I have to give a kudos to one of our directors, Rob McLeod, because, I think Rob learned from his father, who was, mayor of Stewart, and Rob growing up with the Nisga'a and growing up around the communities and growing up in the north, comes with a different level of understanding in terms of, and a different desire to bring prosperity back. There was a time at the turn of the 1900s where Stewart was this bustling camp. And I think we're coming back to a time where, if you look back at that time where Stewart was quite relevant, I think there's a lot of things today in the world that are similar. And I think this is a time where, what's going to get us through this dark time is mining. And we've got a bountiful, amount of resources in this country, and we've got to come up with ways where, everybody participates and everybody wins. And I think we can, there's enough here for all of us.
No, well said. I agree. I think that, mining doesn't have to be a zero-sum game where you view local inhabitants as obstacles to be overcome. I think that that's an extremely, short-sighted and frankly, kind of cruel perspective, right? That bring them in, in a sincere way and real way, and you will, you reap the benefits, right? That there's plenty, there's everybody can win, I guess, right? So no, I appreciate that.
Yeah.
Maybe let's just turn the corner here, and maybe let's circle back to Hecla. So I'm gonna bring up a map of the property, and what we'll see is that on the northwest corner, kind of just like sandwiched in, almost like surrounded on the 3 sides, Dolly Varden is surrounded by Hecla, right? That Hecla has a large area of land that is exploring itself. And so, I mean, as again, I kind of circle back to investors, retail investors. There are things that maybe they can do better at paying attention to, and it's almost like location, right? It's almost like real estate. Like, where are you? Who are your neighbors? And I think that's a large, kind of strength of Dolly Varden's, is that you have this, like you just said, North America's largest or second or third largest silver producer. 40% of all silver is Hecla, and that's your neighbor, right? So, what's the pathway as a retail investor? You always ask, what's the pathway to profit for me, right? And so having a large neighbor such as Hecla, I mean, I'm sure it comes with potential headaches, but for me, I think that's a huge kind of shot in the arm for the legitimacy of Dolly Varden as a pathway to profit for myself or other investors. Could you just kind of discuss what's your relationship with them? I know that there was a failed takeover bid a few years back that they tried to take you guys out. They've got 10% of you, and I think they have a right of first refusal as well, if I'm not mistaken, on any buyout offer. Can you just kind of discuss, your relationship with them and kind of where you guys are at?
Yeah, that's a really important question, and I think you can't look at Dolly Varden without acknowledging that relationship and talking about that relationship, because look, we are a non-revenue, non-cash flow company. So how do we what are we in the business of doing, and who are we doing this for, and what's the end game here? What's the exit strategy? And when I talk about exit strategy, I look beyond Hecla, and I think about all the silver miners and all the precious metal miners and all the miners that are trying to replace mineral inventory. But specifically here, we're in a situation where Hecla did make a hostile takeover attempt to Dolly Varden. It was not seen by the shareholders at the time and by the management at the time as the right offer for the company. So the company decided to stay independent. And Hecla subsequently built a land position adjacent to the company subsequent to that failed takeover attempt, and has been running exploration at Khunkhun over the past few seasons, and has also, so what I can only speak to is since I've been CEO of Dolly, which was about 2 years and going on 2.5 years now. And so my relationship's been great. I came in and I tried to again find ways to win-win, right? How can we advance this company in the best interest of our shareholders? And they're a shareholder. They're a third largest shareholder. Beyond Fury, beyond Eric Sprott, you've got Hecla. And not only are they a supportive shareholder in terms of capital, which is so important. Like, for example, of the $45 million I've raised for Dolly Varden in the last 2.5 years, half of that money's come from two shareholders, Eric Sprott and Hecla. Without Hecla and without Eric, this company would not be in existence today. But beyond that capital, leveraging their technical expertise, having Kurt Allen, we've created something called a technical committee where we've got Michael Henriksen, who is Fury's VPX, very decorated, talented, brilliant ex-Newmont geologist, and Rob McLeod. I don't need to give Rob McLeod any more accolades or comments. And then you've got Kurt Allen, Hecla's VPX. So we've got these three brilliant minds helping us guide our exploration. So ultimately, I think Dolly Varden fits nicely in for a silver-focused company who is focused on North America, focused on safe jurisdiction, high-grade silver, and ultimately, we're going to keep our heads down. And we've got a lot of site visits this summer, so there's a lot of corporations and mining companies that are interested in what we're doing. I think if we just continue to have success and continue to make discoveries and continue to grow, whether it's through acquisitions or through discoveries, organic growth, there'll be Hecla is a potential takeover candidate, but there are others. And, some of the best situations for investors are not take-unders. They're takeovers. They're when you're being chased, right? So, we keep our feet moving and, we're very active and hopefully, we stay independent until we get into a part of the cycle where the valuations are better. And then that way our shareholders get the best possible outcome. But even if you are taken over early in a cycle, the good news is that particularly if there's a share component to the takeover, you get to ride the acquiring company through the bull market. So that's something else that we're considering. Because some guys ask me, well, Shawn, like, what do you want? What would it take? And it's like, well, it's a complicated question because it depends what the structure of the deal is. And I've done a lot of deals, and we've got great banking advisors, and we will at the right time we will have fairness opinions done, and we will bring the right deal and recommend the right deal for our shareholders. And if the right deal is for us to build, right? It's not our number one path, but in business you have to have B, C, and D covered. So path A is grow and to be a pipeline project in a developer's portfolio. That's our mandate. But we're doing the baseline work. We're doing the road upgrades. We're doing all the work that we think a major would do, because ultimately we want to put this up on a silver platter so that it's an easy decision for that larger entity. But to answer your question, Hecla's been fantastic. They've been supportive, and I wish them all the success in the world. They just made an acquisition of a Canadian silver mine, which is fantastic, which is the Keno Hill project. And the good news for where our project is we're not in development, so we don't need a lot of capital, right? We're still at that let's see how big this thing is phase, where that's probably, looking at companies like Great Bear that have gone from 15 cents to $30. That's the type of company you want to own in this phase of the cycle, right? You don't want to own that company where you're bogged down with, now we've got to spend $200 million to build a mine, which is great if you've got the time horizon where you're looking out 5 years, right? But if you're in that, hey, how do you grow ounces? And that's where the value is created for shareholders. That's what's got me excited about Dolly.
Mm-hmm. Well, I think that you're kind of touching on these ideas, but negotiating from a position of strength is so critical, right? That Hecla might be a natural fit, but if you need them, then they can afford to lowball you, and maybe you can't refuse it, right? I think that's what happened to Alexco a little bit.
Alexco had negative working capital. Not only that, but a lot of people factor in what the type of the size of the transaction was, but they don't factor in the stream. There was a big owner's stream that Hecla bought out for Wheaton Precious Metals. And I think the fact that we're not encumbered by a stream, we're not encumbered by debt, the fact that, the way I run this business is we always have ample treasury. It's never going to be in a negative working capital situation. So, I look at the way we're trying to run this business, and it puts us in a position where I'm trying to play from a place of strength.
Perfect. So I guess we'll wind down here. Just a couple, questions that I'll finish off with here. I guess one, if what's the biggest risk facing Dolly from here, and what's the biggest risk preventing it from being a profitable success for shareholders such as myself, and how do you plan to overcome or mitigate that risk?
I guess one of the risks is just time. In terms of how long, and there's certain things that are out of our control. Right. And the things that are out of our control is like the M&A activity at a certain time in the cycle. So those are all things out of our control. So the things that we can control is we just got to put our heads down and make discoveries. But in terms of risk, a risk is, part of our project is inferred. There's an upside surprise where, the grades could be richer, the conversion could be greater. There's a downside risk that ounces don't convert, that you lose ounces, that the grade goes down, right? So that's a risk. And that's probably, I think at this point, the greatest risk of the project, because, it's not like this is a project where we're dealing with some leftist government that's coming in and saying, hey, we're thinking about nationalizing or increasing taxes, or, we don't have any of those types of risks. So the risks we do have are more specific to the project. And so I would say the number one risk we have is on conversion.
Perfect. And so flip side to that, then why is Dolly Varden worthy of my hard-earned money, right? Why should I invest with you?
I think the way I'd answer that is I'd turn it around and phrase it like, if you're looking for exposure to silver and gold, Dolly Varden's worthy because of the size of the project, because of the grade of the project, because of the location of the project, and because if you look, like if you are going to buy this stock, if you are going to become a shareholder, take comfort in that there's all these sophisticated investors. There are mining companies. There are sophisticated institutional investors that have done their due diligence, right? That have been operating for a long time. So I think it's worthy because it's checked the boxes for all these investors. It conceptually, and again, we don't have the economic studies for me to pound my fist on the table, but you look at from a high level resource standpoint and, in terms of the potential life of mine and the grade and all these things like the jurisdiction, we're checking all the boxes. And then if you just look at our recent history, you look back to 2020 when the silver price went up, we have leverage on rising silver prices. So historically, Dolly Varden's been a publicly traded entity for about a decade. And if you analyze that decade, we're outperforming silver by 300%. So silver goes up 1%, Dolly Varden goes up 300%. So I think that if you are making a bet that silver is going to go from 18 higher, whether that's 25, 30, or beyond, I think Dolly is got enough grade size. So I think it's deserving of your investment dollars.
And then just final catalysts, 6 months to 2 year schedule. Is there what can we look forward to?
I'm just razor focused on drill results right now, and I just don't want to look anywhere beyond that because if we're able to significantly grow this resource, and again we go back to that first part of this exchange where we talked about what's an ounce worth. Regardless of what an ounce is worth, if you've got more of them, the company is worth more. So I think the key is let's get out those drill results. And from there, just have comfort that even if the drill results are underwhelming, this is a management team that's demonstrated that we're not growing and having success just on drill results. We can grow this company in many ways, right? We can grow this company through acquisitions, and we've demonstrated that. So Matthew, thank you so much for having me on. I appreciate it, and glad to be your first guest.
Thank you very much. Yeah, I appreciate you taking the time to be with me today. I hope I didn't take too much of your time. If listeners or anybody else out there, if you want to reach out to them, dollyvardensilver.com is the website. You can find me under the name Junior Resource Investor on Spotify, YouTube, or elsewhere. Hope you enjoyed the interview. And yeah, thank you again, Shawn, for being gracious enough to be my first host.
Okay. Thank you so much. All the best, Matthew.
Thank you.